Welcome back to the floor of the CME Group here in Chicago, December 16th, this Thursday. I just recently got back from a due diligence trip on some foreign currency, and it was definitely a slap in the face coming back to Chicago last night with 19-degree weather. I'm Jeff Kilberg, better known in these parts as Killer from Treasury Curve. We're an institutional money market portal. We assist firms in their overnight cash management. I want to talk about a couple different things. We have some hot topics today. Let's get into the trade. Let's get into the CMZ zone here on the floor of the CME Group. We talked briefly about Ireland. The big vote was yesterday. It went through the approval of $90 billion. Spain had an auction today. It was a tough auction over there. And I think that kind of, that precipitated a little bit from yesterday, and that's why that currency was off a little bit, because they saw this auction coming in. It did show some weakness and some vulnerability over there in the Eurozone. The tax deal, I think that's going to go through smoothly. Everyone feels good about that domestically. And the Philly Fed came out this morning. You know, that was a stronger number than expected, 24.3 versus 22.5. Yeah, I think after we drilled down a little bit on some of those numbers, that maybe it wasn't as strong as a number. So currently the market's flat on the day right now, and we're trying to get a feel for it. You know, I want to talk briefly about. You know, I got a note from a listener, and actually sent this in to me. And commercial paper. You know, commercial paper is used for, it's a short-term investment vehicle. We offer on Treasury Curve government funds as well as commercial paper funds called prime funds. And the commercial paper was down $26.2 billion as of the week of 12/15, as of yesterday. It's the 7th week, and it's been down $186.1 billion in those 7 weeks. So it's according to Bloomberg, it's a record low, 65% off the 2007 levels. Total outstanding of commercial paper, $981.7 billion. Now there's two ways to look at it, and actually I'd like to get some thoughts on this. Feel free. You can get me at the Killer on my Twitter account. You can get onto the CMZ video and ask me a question there, but there's two ways to look at that. Are we not having the appetite that we used to have for the commercial paper? Is the risk kind of off there? You tell me. I think it's a good barometer to look at, though, that people are still not 100% certain. We're seeing huge cash balances in some of these Fortune 500 companies. When is this going to start to move a little bit? I think that could be a catalyst for us to go the upside. However, right now, that uncertainty in Europe, uncertainty here is kind of making these commercial papers, you know, hit record lows. It's a big deal right now. I want to get your thoughts. Please, once again, give me your input. Let's talk a little bit about the Treasury. Let's get into the zone. This is just a mass exodus. I mean, we talked about this last week. This, you know, room of 1,000 people, and this 3-foot by 3-foot door, and people were getting stuck in that door and squeezed, and this thing dropped. We've had a full basis point, you know, 100 bips, a full percentage point in the 10-year move ever since Uncle Ben said we're going to keep rates low. That's insane. So, is there a bounce? It's called a dead cat bounce. It's gone nowhere. Will not come off these lows. Made new lows yesterday. You know, the yield in the 30-year, 4.56 yesterday. Went down there, touched it again at that 1821, 118.21 price. Came off it, currently right back around that unchanged for the day, 119 even. You know, it's got a lot of work to do to get back up. Is it overdone? For sure. But it was overdone at 122 handle. Continues to go down, the dead cat bounce. Be mindful. The 10-year hit a high in the yield yesterday at 3.57. 3.57. Uncle Ben, it was around 2.25. Wicked move. And people are, you know, just seeing this yield move up so much. It'll be interesting to see the reaction. You know, pretty muted statement from the Fed on Tuesday. We'll see where that goes. Be mindful of both sides. You know, I want to talk some SPOO here. It's S&P, you know, that March contract. We were trading March now. 1242 high the other day. Come off a little bit yesterday. I think the whole Eurozone, with everything going on, kind of was the catalyst over there for that. But it wasn't a big downside. And I think, you know, we kind of go back to, you know, a month ago when that 1173 to 1200 level was so key. Well, now we're kind of stuck. If we get under 1228, maybe there's some downside room. But, you know, the D's, you know, just basically 5 handles off. You know, that 1190.75, that was kind of an important level earlier. That's now the 50-day moving average. And I think under 1211, you know, that's the deciding factor. But it's really pretty muted point. Santa Claus is here. He's spreading some cheer. This thing continues to come. So I think the street is looking for a movement, and be mindful and play those sides. They're giving you opportunity. Euro currency, 132.65. How many times have I spoke to this weekly pivot? It's been beautiful. Went above it the other day, made a new high, up at 134.93. The street came in and crushed it. The street got it back underneath there, and now it's kind of looking like it wants to go that 200-day. I've spoke to this 200-day a couple times. 131.25. Is it on its way? We don't know. Currently, it's trading under that 132 even level. Be mindful of that. Play that weekly pivot has just been beautiful. You've been able to play it back and forth. I think the low of 129.63 in late November, maybe that's a target if we get under the 200-day. If we don't get under the 200-day, we could go back up here. So I think we got a lot of moving parts right now. Give me your information. I'm Jeff Kilberg, better known as the Killer from Treasury Curve. Remember one thing, be the hammer, not the nail.